Welcome to Mythos AI, your source for Cliff's Notes on complex subjects. Join Anna and Phil for yet another engaging conversation.
All right, so we're diving into something today that really seems to defy some pretty basic market logic.
Yeah,
You're probably aware of that big recall Tesla had to issue back in March 2025 for the Cybertruck.
right.
This was a widespread safety issue, right?
Right.
It had to do with a piece of the truck's exterior that could potentially detach the cant rail assembly, I think it was called, and it affected just a huge number of vehicles.
Yeah.
Now, usually when news like this breaks about a company, particularly something of this scale,
Yeah.
you'd expect the stock price to take a hit.
That's usually how it goes. Yeah, a safety recall on this level, I mean, we're talking over 46,000 vehicles.
Right.
And for a defect that the National Highway Traffic Safety Administration basically classified as a serious road hazard,
Wow.
that kind of thing is almost always seen by the market as a bad sign. It raises all these questions, about the quality of their manufacturing, potential legal trouble down the line, and just the overall hit to the brand's reputation. And to add to that, this wasn't even the first recall for the Cybertruck since it came out at the end of 2023. It was actually the 8th.
Seriously.
Yeah, covering all sorts of problems from inverter malfunctions to issues with the accelerator pedal. So there was already a bit of a history of quality concerns surrounding the truck.
So basically, you've got this company that's already had its fair share of recalls, and then they get hit with this major safety issue involving their brand new flagship vehicle.
Right.
You'd naturally think investors would react negatively and the stock price would drop.
Exactly.
But that's not what happened at all. The market response was really kind of bizarre.
It really was.
Leading up to the recall on March 19th, 2025, Tesla's stock closed at $235.86. The recall was announced the next day, March 20th.
Okay.
By March 25th, just 5 trading days later, the stock price had shot up to a peak of $288.14. That's a massive jump of 22.25%. While it did settle a little, by March 28th, closing at $263.55, it was still way higher than it was before the recall news came out.
Interesting. So the question is, what explains that?
That's exactly the puzzle here. We have this big safety recall that by all accounts should have spooked investors. But instead, it's followed by this huge surge in the stock price.
Yeah, and it makes you think that there must be other forces at work here, something powerful enough to override the typical market response.
Right.
It's also worth remembering that Tesla's stock had actually been struggling for a while before this whole recall thing. Even in the months leading up to it, the price had already taken a pretty noticeable dip.
Really?
Yeah, reports were showing that it was down as much as 42% since the start of the year, which made it one of the worst performers in the S&P 500. So it was already facing some headwinds.
Makes that surge even more strange, doesn't it?
Absolutely. A stock that's already on shaky ground would normally be even more vulnerable to bad news, like a major recall.
So we got this stock that's been having a rough time. Then we get this major safety recall announced. And then, boom, the price jumps up. It just doesn't seem to add up.
Yeah, it really doesn't.
I think a key part of understanding this situation is to consider the political climate at the time. Elon Musk, as you know, isn't just the CEO of Tesla. He's also heading up the Department of Government Efficiency, or DOGE, under President Trump, who's now in his second term.
Right. And that's a crucial piece of the puzzle. I think Elon Musk leading this new department in the Trump administration adds a whole other layer of complexity to the situation.
Absolutely.
I mean, DOGE was created with this goal of modernizing the government's technology and cutting down on wasteful spending. And Musk being in charge of that gives him a ton of power.
Oh, for sure. He's making decisions that are affecting billions of dollars in government spending.
Exactly. And it's not just advisory stuff either.
Right. We're seeing reports about freezes on billions of dollars in grant money. Huge cuts to the workforce in all sorts of federal agencies. Even targeted budget cuts and restructuring at massive organizations like USA and the Social Security Administration.
Yeah.
It's leading to office closures and reduced services. It's having a wide-reaching impact.
Yeah, it's definitely a politically charged situation. It's causing a lot of debate.
And with Musk being so closely aligned with President Trump, a known Tesla supporter, it likely creates some tension among Tesla's customer base and their investors.
Yeah, those with different political views might be turned off by the whole thing. It's totally understandable.
Absolutely.
That kind of political polarization could definitely have contributed to the negative sentiment surrounding Tesla stock in the lead up to the recall.
We even see protests against Tesla happening.
Right.
So it seems pretty clear that Musk's very public role in the Trump administration is a factor that's affecting the company's stock. But then we also see President Trump and members of his administration actively promoting Tesla.
That's right. In the time leading up to the recall and the stock increase, both President Trump and Commerce Secretary Howard Lutnick came out publicly in support of Tesla.
Wow.
Yeah, President Trump even had Musk at the White House to show off Tesla vehicles. He even announced that he was going to buy one himself as a show of confidence and support.
I remember that.
And Secretary Lutnick went even further, explicitly telling people to buy Tesla stock, saying it was undervalued.
That's a bold move.
It is. It definitely raises some eyebrows when you have high-ranking government officials making those kinds of endorsements.
For sure. It makes you wonder about potential conflicts of interest and whether it's appropriate for them to use their position like that.
Yeah, you can see how that could be perceived. But there's no denying that it sends a powerful message, especially to those who are already aligned with the Trump administration.
It's almost like a nudge to invest in Tesla.
Exactly. It's like saying, if you support our policies, you should support Tesla too.
Right. So we've got this very unusual market reaction happening in a highly politicized environment. And it makes us think about the possibility of outside forces influencing the stock price. Could this be a case of strategic foreign escort buying? Is that something that actually happens in the financial world?
It's definitely a possibility. It's not unheard of for nations and powerful players to buy up assets, not just for financial gain, but for strategic reasons, often with goals tied to politics, economic stability, or boosting their influence on the world stage.
Interesting. So they're using these financial tools to achieve bigger goals.
Right. It's about more than just making money.
Can you give us some examples of how this has played out in the past?
Sure. Think back to Japan in the 1980s and 90s. They were buying tons of U.S. Treasury bonds. And while some of that was due to trade surpluses, it was also a strategic move to stabilize the exchange rate between the yen and the dollar.
Okay.
It was about strengthening their economic ties with the United States.
So using financial leverage to shape their relationship.
Exactly. And the Plaza Accord back in 1985 is a good example of that. It involved several countries working together to deliberately weaken the dollar. It shows how nations can team up to manipulate financial policies for strategic economic goals.
Right. So playing the financial game to achieve those broader strategic objectives.
Precisely.
Are there other instances where we've seen this kind of thing?
Absolutely. Remember the 2008 financial crisis? Well, several Gulf states with their massive oil wealth stepped in and invested heavily in struggling Western banks.
Okay.
Now, while they were probably thinking about returns too, these bailouts also played a role in stabilizing the global financial system, which was obviously in everyone's best interest since these states were heavily invested in it.
Right.
And some people argue that these moves also helped increase their political sway in Western countries. They called it bailout diplomacy.
Makes sense. So providing financial aid as a way to exert influence on foreign policy?
Exactly. Then there was the European sovereign debt crisis a few years later, where there was all this talk about China possibly stepping in to stabilize the Eurozone.
Interesting.
Yeah, China had these huge foreign exchange reserves, and the idea was that they could buy up a ton of Eurozone debt to help things out.
Makes sense.
But it also had major geopolitical implications. It meant they could potentially gain more control over Europe while ensuring the stability of one of their biggest export markets.
It's all connected.
It is. And while those examples involve governments using big financial tools to influence entire economies, the same kind of thinking can apply to specific companies, especially in the tech sector.
Right, so governments investing in companies for strategic reasons.
Exactly. We see sovereign wealth funds all over the world making these strategic investments in tech companies. And it's not just about profits. They want to boost their own domestic economies, get their hands on key technologies, and strengthen their position on the world stage in things like AI, clean energy, and telecommunications.
Tesla seems like a prime target for that kind of investment, right? I mean, they're leaders in electric vehicles, energy storage. They're involved in AI through their self-driving cars and XAI ventures.
Yeah.
And they're connected to space exploration through SpaceX.
Exactly. They're not just a car company. They're at the forefront of all these strategically important industries. So it makes sense that foreign actors might want to invest in them for reasons that go beyond just making money.
So theoretically, foreign actors could be motivated to invest in Tesla for strategic reasons.
Absolutely.
But how would they do that without attracting attention and potentially driving up the stock price before they've built up a big enough position?
That's where things get a little more complicated.
Okay.
This is where you start to see discrete trading methods come into play, things like dark pools.
What are those?
They're basically private trading platforms that allow big institutional investors to make huge trades without anyone knowing the details until after the transaction is done. It's all very hush-hush. Yeah, this lack of transparency makes it possible for them to buy up a bunch of stock without tipping off the rest of the market.
So they're trading in secret, basically.
Yeah, sort of like an off-the-books transaction.
So they can buy up lots of shares without anyone knowing who's behind it.
Exactly. And on top of that, they can use things like shell corporations, which are basically companies that exist on paper but don't actually do any business or nominee accounts, where a bank holds the securities for the real investor.
That's crazy. So it's all about layers of anonymity.
Exactly. It makes it really hard to trace who's really behind the buying.
Are there any rules about when investors have to disclose their ownership in a company? Like if they own a certain percentage of the stock?
Yeah, in the U.S., investors usually have to disclose their ownership once they own more than 5% of a company's outstanding shares.
So that 5% threshold is like a loophole.
It kind of is. If foreign entities coordinate their efforts, maybe working through multiple entities that each own less than 5%, they can fly under the radar.
They could buy a lot of Tesla stock without anyone ever knowing.
Exactly. And it happens all the time. Sophisticated investors use these tactics every day.
It really makes you wonder what's going on behind the scenes.
It does. It highlights how much activity can occur in the market without any public awareness.
So to bring it back to Tesla, we've got this strange market behavior happening in a very politically charged environment. And we know there are ways for foreign actors to buy up stock discreetly. Now let's dive into a real-world example of this kind of activity that directly involves Elon Musk, Saudi Arabia's investment in Twitter, which is now called X.
Right. And that's a really interesting case study that's very relevant to our discussion.
Mm-hmm.
When Elon Musk bought Twitter back in 2022, Saudi Arabia played a major role in financing the deal. Saudi Prince Al-Walid bin Talal and his company Kingdom Holding reinvested their existing stake of $1.9 billion.
Wow.
This made Saudi entities the second largest shareholder in X after Musk himself. And on top of that, Qatar's sovereign wealth fund also chipped in a significant amount.
So you have these state-linked foreign entities directly investing in a company controlled by Elon Musk.
Yeah.
And in a sector as sensitive as global communications.
Exactly. It raised a lot of eyebrows here in the U.S. There were calls for investigations into the potential for Saudi influence over a platform used by millions of Americans.
Right. There were concerns about censorship, the spread of misinformation, all sorts of things.
Exactly. And yet the Saudi investment in X has remained in place. It really highlights the strategic importance of this stake for the Saudis, and it perhaps suggests that Musk is willing to accept this kind of backing despite the controversy it generates.
It's a bold move for sure.
It is, and it really underscores how these types of strategic investments can happen even in sensitive areas. And it makes the possibility of similar foreign backing for Tesla even more plausible.
So let's go back to the Tesla stock surge and look at the specific timeline. We know the recall was announced on March 20th. Can you walk us through what happened to the stock price day by day?
Sure. So on March 19th, the day before the recall announcement, Tesla's stock closed at $235.86. The day the recall was announced, the price actually went up, slightly closing at $236.26.
Interesting. So an initial positive reaction.
Yeah. The bigger jump started on Friday, March 21st, when it closed at $248.71, an increase of 5.27%.
Yeah.
Then on Monday, March 24th, it jumped even more, closing at $278.39, a whopping 11.93% increase.
Wow.
It hit its peak on Tuesday, March 25th at $288.14, another 3.5% increase. By the end of the week, on March 28th, it had settled to $263.55, but still significantly higher than it was before the recall.
It's really not what you'd expect to see after a major recall.
Not at all.
You'd expect the opposite. It's almost like the bad news didn't even register.
Yeah, it makes you wonder what was really driving that upward momentum.
So let's talk about the typical explanations that might be offered for stock price increase and whether they make sense in this case.
Okay.
One possibility is short-term speculative trading. Maybe some investors saw the initial dip as an overreaction and jumped in to buy low, thinking it would bounce back quickly.
Right. But the scale and speed of that 22% increase after such bad news makes that explanation seem a bit weak on its own.
Yeah, it doesn't quite add up.
Speculative rallies usually happen when there's some kind of good news or positive catalyst.
Right.
It's unusual to see such aggressive buying based solely on the assumption that others overreacted to bad news.
What about a surge in buying from retail investors? Tesla has a really dedicated fan base.
That's true. They do. And while a coordinated buying effort from retail investors could push the price up, it would take an extremely strong and coordinated effort across a huge number of individual investors to create a sustained 22% rally in a company as big as Tesla.
It's hard to imagine everyday investors having that kind of power.
Exactly. Especially as a spontaneous reaction to negative news, it just doesn't seem likely.
What about the argument that demand for Tesla vehicles is just so high that a recall is nothing more than a minor blip?
It's true that Tesla has a strong brand and a lot of people want their cars, but a full safety recall of their flagship vehicle, especially one that's already had some quality issues, would normally raise concerns about future sales and customer confidence, at least in the short term.
It seems unlikely that investors would completely ignore that.
Exactly. It doesn't make sense that they'd be so eager to buy up stock right after such a big announcement.
So while those explanations might explain some of the general market movements, they don't fully account for the size and timing of this post-recall surge.
That's right. It's just too unusual.
Which brings us back to the idea of strategic foreign support buying. How plausible is that as an explanation?
I think it becomes much more plausible when you consider the ways in which discrete trading can happen and the historical examples we discussed earlier. We know that dark pools, shell corporations, and nominee accounts allow for significant buying to occur without anyone noticing.
Right.
And that 5% SEC disclosure threshold provides a window for accumulating a large stake without having to go public.
So if you had a coordinated effort by foreign entities to buy up a lot of Tesla shares right after that recall was announced,
It could create enough demand to offset the expected selling pressure and potentially even spark a rally.
and that could attract even more buyers who just want to ride the wave.
Exactly. It's like a snowball effect.
And by injecting a ton of capital at just the right moment, foreign actors could prevent a price drop and maybe even orchestrate a big jump.
Exactly. And that's basically what we saw happen.
Okay, so it's definitely possible from a market mechanics standpoint.
Right.
Now let's go back to the why. What reasons might foreign states or their allies have for wanting to support Tesla's stock back in March 2025?
Okay.
Well, Elon Musk's close relationship with President Trump and his leadership role in DOGE could be a major factor.
It could definitely be a way for foreign governments to try and influence U.S. policy.
Right. Musk is in a position where he's making decisions about federal spending tech initiatives,
Right.
even the structure of government agencies.
Right. And foreign governments that want to push their interests in the U.S. might see supporting Musk as a way to indirectly sway those decisions.
It's like they're investing in someone who already has access to the levers of power.
Exactly.
And if Musk is financially secure and influential, he's in a better position to advocate for policies that align with their interests.
Precisely. And we can't forget about Musk's other companies like SpaceX, Starlink, and XAI.
Right. He's a major player in some really important areas.
Exactly. And supporting Tesla could be seen as a way to ensure the success of that whole tech ecosystem.
Okay.
It's about potentially gaining preferential access to cutting-edge technologies.
And then there's X, the social media platform. It's a powerful tool for shaping public opinion globally.
Right. Foreign governments might see keeping Musk financially stable and in control of X as vital to maintaining or increasing their ability to influence the flow of information.
So supporting Tesla could be a backdoor way of protecting their interests on X.
Exactly.
So the potential motives seem to be about influence, access to technology, and control over information. Are there other strategic advantages they might be after?
Absolutely. Strategic support could lead to all sorts of favorable arrangements. Think about things like decisions about where Tesla builds its factories, government contracts, agreements, to not interfere in each other's affairs.
So it's all about leverage.
It is. And given how unpredictable U.S. politics can be, especially with President Trump in his second term, supporting someone like Musk could be seen as a way to hedge their bets.
Right. So they're ensuring a channel of influence no matter who's in charge.
Exactly. It's a long game.
So we've got this scenario where a lot of pieces seem to fit together in a very specific way.
We do.
But of course, proving this theory of strategic foreign support buying is a whole other challenge.
It is. And that's because the methods they use are designed to be discreet.
Right.
And the regulations about disclosure make it really hard to catch them in the act. Unless they slip up or their combined holdings go over that 5% limit, it's tough to say for sure.
So we're left with this intriguing puzzle. We have this major safety recall, followed by a rapid and significant increase in the stock price, all within a very politically charged environment. And we know there are both the motives and the means for strategic foreign intervention.
It's a compelling case.
It makes you wonder how many other seemingly illogical events in the market might have these hidden stories behind them.
It does. The counterintuitive stock surge following the recall is the main thing that stands out. And when you look at the history of things like Japan supporting the US dollar, the Gulf states bailing out banks, China's role in the Eurozone debt crisis, and even the Saudi investment in X, it makes you think.
It does. And when you factor in the ways they could do this through dark pools, shell corporations, and nominee accounts while staying under the radar,
Yeah.
it all starts to make sense. And the motivations are clear. They could be looking to influence policy decisions through Musk's role in DOGE, leverage Tesla's tech advancements, or even control information through X.
It's all on the table. And those public endorsements from President Trump and Secretary Lutnick certainly add fuel to the fire.
They do. While there could be other explanations out there, they don't fully explain the scale and timing of this particular surge.
That's right.
And at the end of the day, it's incredibly difficult to prove or disprove this idea of foreign interference because of how secretive these trading methods are.
That's the tricky part.
So I'll leave you with this. As global finance and geopolitics become more and more intertwined and market activity becomes increasingly opaque, how might these unconventional forces be quietly shaping our economic landscape?
It's a question worth considering.
It really makes you think about how much we might be missing when we look at the markets through the lens of traditional financial analysis.
Absolutely.
There could be a whole other level of activity going on that we're just not aware of.
A hidden world of motives and strategies.
It's both fascinating and a little unsettling.
It is.
Thanks for listening to Mythos AI. Stay tuned for more concise insights. And remember to hit the like button and subscribe for future episodes.